From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, with the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London. Just gone a couple of minutes past 12:30 UTC here. We're about an hour away from the pre-market open in New York. So big shout out to everybody making the stream live today. See a load of people watching on YouTube and even more on Twitter, which is awesome to see. Big welcome to everybody. Erica, see you there in the chat, real stalwart of the show. So hope everyone's doing well today. Hope you're all having a good week in the build up to Christmas. So wanted to kind of make a focus today on continuation from where we were on Monday. We looked at a couple of really nice trade setups on their link, which we can obviously take a look back as well. Joe C, hello mate. Take a look back at some of those trade ideas, as well as obviously just looking at Bitcoin and where we're kind of sat at the moment. Now, we do obviously make a bit of time on a Wednesday as well for our Alt Request Wednesday, which is really, really big. And there's something really exciting I want to introduce you guys to today, which we're going to cover a little bit more in the upcoming weeks. And that's a new partner that the Birdnest have been working with called CVI, the Crypto Volatility Index. Now, I know the crypto space isn't kind of deeply rich with people that come necessarily from traditional market backgrounds, but for any of you that know about the VIX, the Volatility Index, and how you can trade that and how you can also use it as a really, really, really helpful hedging mechanism because you're trading the volatility in the market. Now, this company and their team, who, by the way, are just really, really smart, inspiring group of people, have managed to release and have refined massively now on its version 4 of a crypto volatility index. So we're going to kind of do a few pieces on this over the next few weeks and then move on to it after Christmas as well. But I wanted to just kind of show you guys the platform, which we'll do a little bit later on, because I know a lot of people, and one of the key things we've been hearing a lot at the Nest is that people have been getting chopped up quite a lot in the market conditions. Obviously, we've had this big kind of up-only environment recently, as is quite typical. As more people kind of flood into the market, they get used as exit liquidity and end up kind of being on the wrong side of it. So the great thing about something like the Crypto Volatility Index is that you can basically hedge that, right? So you're trading the volatility rather than the asset, because as we all know, with the crypto markets, the assets are pretty much correlated, right? So getting a hedge on that is difficult. But let's say, for example, you're in a position whereby you're long on Bitcoin, you can take a percentage position of that, and then you can take that and you can put that on the Crypto Volatility Index. Now, if you're on the wrong side of a news release or you're on the wrong side of something that acts as a big catalyst for the market, well, then all of a sudden you can see that Bitcoin position drop, but actually the CVI can go up, right? So it ends up defending and protecting your position. Then when you're back aligned with the order flow and you're back aligned with the smart money, if you like, your institutional money, the order flow that's coming in, and that's bullish, the volatility, you're then back on the right side of that volatility. So a really, really clever way. And actually, I think what I'm going to do on one of the shows is maybe get one of the guys from the team on here. And I'm also going to be sharing a few bits on Twitter for you. But it's something I've been introduced to recently. I was obviously a user of the VIX in traditional markets, and I found it so interesting. So just wanted to give you guys a heads up on that. But we can look and we can cover that a little bit later on. But I think a few of you are going to find that really interesting. But let's just do a couple more hellos. So you see a lot of familiar faces coming in. Joe C, good morning, mate. Erica, a wonderful Nitpar as well. Simon, great to see you on here again, mate. Wax, Steve Etienne, my man, how are you doing? And Imran Khan, a really, really long-term friend of the Nest. So, guys, what are we looking at? What are we watching? Did anybody manage to catch a piece of the link trade? So we did a live trading session. Let's kind of catch up where we were on link, because I think we covered that on the Monday as well. Khalid, hello, my friend. What a wonderful name to see on here. I have a dear friend in Egypt who lives in the Sinai district called Khalid, and just one of the most beautiful human beings. Welcome, welcome, welcome. Full of cold, Steve. Yeah, I'm not exactly free of flu season myself. I think a lot of people have kind of come down with it quite aggressively, haven't they? So let me shut up for a minute and let's make this a big screen so you guys can all see this. I just wanted to show you guys this in terms of our trade update from Link. So for anybody that wasn't involved in it, you can go back and take a look at the stream on Monday. We played this out in terms of a live trade on there. The Aussie Bogan, here he is. And fun enough, someone else on the stream today who's a big fan of CVI. So Govi, by the way, for anybody that doesn't notice, is the governance token for CVI, the Crypto Volatility Index. So I'll show you that as well. And actually, our team have been putting together some really interesting kind of swing trades and fundamental analysis based on this. So we're going to cover it a little bit in the upcoming sessions. It's just one of those little gems that's sitting there that people aren't really talking about at the moment. And for me, they're always exciting, right? Now, we always, as we always do, is saying to everyone, make sure that you are doing your own research on these. But I can tell you right now, the best projects for me that I invest in are ones that have this real world application, right? And when you're looking at this as being a major hedging platform and the only one of its kind in the crypto space, it's definitely something to get excited by. So let's just quickly take a look here. Let's pop onto our hourly and just look at how we were framing this link trade. All right. Now, we've obviously gone to a higher time frame. In this particular case, we were looking at our daily and we're saying to ourselves, where's our key liquidity? Now, we've obviously got this. So these were our order blocks here. As price dropped away, we retested into them here and we've sold off. But we also had this key high resting here as well, right? So that was something that we wanted to be aware of because we're always looking for where the liquidity rests in the market, right? And for me, the key things that we're looking at here as we stepped into our into our New York trading session, which is depicted by these little blue dots down here. And this is the New York PM session. The yellow dots represent London. It was quite clear that this fair value gap here was suppressing the market, right? So look what happens. Now, something I get asked a lot and something that I would just recommend that everybody does that are using similar trading systems or using gaps, inefficiencies, fair value gaps, however you look at them, is make sure that when you draw one in, say on the hourly, this is the hourly time frame we've got up now, then you're making sure that you're using that for your closes as well. Because I see a lot of people look at an hourly fair value gap, drop to a 5 minute, we get above the hourly fair value gap, and they're like, right, I'm going long. Well, what we can see here is how the market likes to punish that kind of preemptive move, right? We don't get a close above this. And at the time that we drew this on, which is still on here, this represents this green blob here is showing what we were waiting for. We needed to see a close above it, yeah? And at the time, we'd then drawn in our arrow to show what we wanted to see on a lower time frame, which is we got the close above, which we got here. We then step into our New York PM session, right? So we've inversed this fair value gap, showing strength. We've got a beautiful, clear, high time frame target, meaning that then when we were looking to execute this on, say, a 5 minute chart, we can see how we can wait for that close above, which we got here. We then wait for our New York session. What do we look for? We're looking always, if we want to go long, what we want to see the market do first, as counterintuitive as that is, right, is looking at how price comes up and then comes back down and then retests this fair value gap here, right? So this gives us our entry because this fair value gap left here with displacement above this high shows us that the market's looking to move bullish. That's where we entered. We managed to get our trade all the way up here. Actually, we can see what happened when we got up to here. We literally just wicked above it, just a smidge, right? And then the market's, delivered bearishly since. We were then applying the same principles here to look at the inversion of this higher time frame fair value gap. And then the trades that were on for us when we were looking at this yesterday, same principle, comes back down. These are our up close candles. Close below these confirm this as our order block. Also gives us our change in the state of delivery. So then within this, right, we're looking at this on a 1 minute chart to just try and refine in an entry. If you're a 4 minute chart trader, obviously as well, you can look for your inversion fair value gaps. You can also look for your breaker entries. So for those of you, if we're looking at this as a structure, yeah, you can wait for price to close below. You can become a seller in here down. I would target that first low, move my stops to entry, and then chase that for lower targets, all right? So I know Link was mainly the one that we kind of focused on. Atanus, hello, mate. How are you doing? Good to see you. So what are we going to take a quick look at today? Erica's in the chat here with us as well. Kaz, yeah, sure. So what we're going to do, guys, is we're going to take a look at Kaz, and then we're just going to do a top down. We'll remove everything from the chart. We'll start by looking at our weekly or our daily time frame, just so that we can get in that mindset of how we kind of frame these trades and then how we move down to an execution perspective, okay? And we have it. Here we go. So as always, guys, if you've got any questions on this, then please don't hesitate to ask. Yeah, always just pop them through into the chat and we can take a look at those. Right, so this is interesting. So we've obviously looked at this on stream recently, and what I really love about this is we can really see the power of the fair value gap inversions here, right? So this, which we had drawn in green, we were clearly looking at this to offer support, yeah? But our theory is if our fair value gaps don't offer us support, then if we close below them, we expect a support resistance flip, in which case this turns to an inverse fair value gap. Absolutely no different to how we were looking at this on Link, right? On the lower time frames, how we were looking at the hourly inversion. Now, if we're looking at this as a daily inversion, we've closed below it here. So actually, we would have been looking to get short from Friday the 8th. Now, we're running down this low first. We displace below this low. Yeah, so you see we get the close below, we retest into it. So from here, we're still retaining our bearish bias, all right? So if we look here, we can see that we have these up-close candles. So right here, we have our bearish order block. This order block's confirmed on the close below it, which is this candle. So all of a sudden, we've run a low, we've taken external liquidity. We expect price to draw up into some kind of internal liquidity, which is our typically fair value gaps. We don't have those, then we look to our order blocks or breakers, right? We see price draws in there, ultimately then moving lower where we have these beautiful equal lows, yeah, engineered on that corrective move higher. Price flushes those out. Then as we move lower, and as we do at any stage, we're asking ourselves where price is delivering from, right? So then on a weekly scale, we can see this, on a daily scale, we can see the price is drawing down. This fair value gap here is what's drawing price lower, okay? If we take a simple Fibonacci here, from the low to the high of this price leg, and we look at our premium discount range, then our expectation here is that we're going to be delivering bullish from this fair value gap, which is down in discount. That's the green lower half of the range, meaning that we favor long setups from here. So this helped align with our bearish bias above. This now we're saying, okay, well, where could price be reaching for? Well, quite simply, we come down, we close this candle. What do we leave above? We leave our bearish fair value gap above. So then all of a sudden, price has come down, we've closed here. Now, because we're delivering from a bullish fair value gap, our expectation is that price has taken external liquidity, bullish fair value gap, so we expect a corrective move to internal liquidity. This fair value gap here represents our internal liquidity. So when we're delivering from this, as we are here, we would be expecting price to sell off lower, right? At what point would we be wrong? Well, let's clear this up a little bit. As we did before on Link, except obviously we're looking at this on a daily scale, which is important to remember, if we get ourselves a bullish close above this, violating this fair value gap, then that for me would be the indication that price is reaching higher. And the most obvious place that price would be reaching here would be above this higher, right? Until then, yesterday, today, we have to retain a bearish bias here because we've delivered from here, right? Now here is a little bit less certain. So let's get rid of that for a second, because our expectation is that price is delivering internal liquidity here. So now we're looking for external liquidity, which is in the shape of this low. We're not just blindly placing limit orders, or I'm certainly not. I'm going in here to look for confirmation within our trading sessions. So let's just take a very quick look at yesterday. And we're going to drop down to our 1 hour for this. So yesterday, when we move into the charts, if we're looking to be short bias here, yeah, bearing in mind that price is obviously having this corrective move higher, and we're saying to ourselves, okay, we're delivering here. This is our bearish fair value gap. We just do that in red for you guys so it stands out a bit more. So we have our bearish fair value gap. Now within here, I'm personally looking within our trading session, so London, New York, and looking for price to push lower. So I'm looking for a couple of different things here. I'm either looking for what's known as a change in the state of delivery, meaning that we get a close below the up close candles, right? We have one here, for example, as we move into the end of London. We then have a corrective move higher. But ultimately, where is price delivering from? That's the question that we ask ourselves on all time frames. And we can see here that we've got this bearish fair value gap and this order block, right? Now, this order block hasn't been validated at this point because we haven't had a close below it. So if we look left, what we're saying to ourselves is what's suppressing the market? And I think we can see as we look across here to this bearish fair value gap, we haven't closed above this. We've seen rejection here. We're now seeing rejection here. As we then step into our trading session here in New York, right? Then this point here is where we're looking for short setups. A good way to do that, I'm just going to mark that as the next candle, right? Because that one hadn't closed at that point. So if we now move down to a 5 minute, just to show you quickly how you can get involved with these in terms of trigger mechanisms, which is Imtiaz. Apologies for absolutely murdering your name there, buddy. Let's have a look. Good day, BC from Doha. Hello, my friend. Beautiful. Could you please elaborate a bit on trigger mechanisms on the lower time frame and also navigate from high time frame to low time frame trading? Try to pick up the course. Of course, mate. Yeah, no problem. So as we're looking at this, right, this is how we're kind of decanting down, especially on BTC. Yeah, sure. Let's take a look. Make a note of that. And we'll look at that. We'll do a very quick high time frame down to triggers. Yeah, on BTC. So as we've done on this one, right, what our kind of focus here is, we know we're delivering from this, yeah, from a bearish array, meaning that we've got a bearish fair value gap. Now, as we step into the beginning of our trading session, which is here, right, 1330, let me just pop this on here. Right, we've got our trigger mechanism before, price has drawn up. We now need an entry mechanism that allows us to get involved here, right? So we do one of two things here. We either designate an area that we would look for a 1 minute entry, yeah? And I know a lot of people don't like to kind of trade on that lower time frame, and I think that's actually quite sensible a lot of the time. You get a lot of noise. So something that I like looking for are our inverse fair value gaps, especially when you've got one nice big clean fair value gap like that. Price closes below it here. We can see, we know in terms of our draw on liquidity, we know we're coming down into this area because that's where our high time frame fair value gap lies. But ultimately, I'd be looking at this area here. I'd have my stop loss above this high. I'd want to see this be like at least a 1-to-1 down to here, but ideally a 1.2 to 1.4. So we've got a good risk to reward. Now, I'd be taking profit here, right? And I'd also be moving my stop loss to my entry point, meaning that if we then purge lower, you can have limit orders set at these lows, trimming a little bit more profit. But ultimately, what you do is you protect yourself if price runs up and you're on the wrong side of the move. All right. So if we just pop back out just for a second to look at where we are at the moment with CAS, well, for me, we're delivering from a bearish fair value gap. We've got probably around about 40 minutes until we see the New York market open. If I was looking to trade this in London, then I would be looking in terms, so if we've got any London traders here, I know I don't cover London very often, so for that I do apologise, but really what I'm looking for in London is what Asia's doing, right? So if I want to do that, let me just show you Asia. So you see we've got this here, we've got the Asia range, right? From this low here up to this high. So what we're looking for here are any kind of liquidity sweeps that we would get within London. And we can see here, actually, we've not taken the highs of this and the lows are still very much intact. So we wouldn't be using kind of an Asia range trading model for this for London, just because we haven't swept either the high or low. What we could do in our London trading session, quite simply, is either use a confirmation setup based on a 5 or a 15 minute. So our 5 minute, for example, would follow exactly the same principles, whereby we would look for a fair value gap inversion to show weakness. So we would draw that across to here. Let me zoom in so you guys can see that a little bit clearer. So here's the inversion, right? We would be expecting this fair value gap to offer support to price, right? What we can see is as we close below this here, our expectation is then for price to run lower. Now, personally, I wouldn't be trading this because it's outside of a kill zone, right? I'd be looking to trade this between the 7 a.m. open of the London market, or I'd be looking to trade this later on down into the New York sessions. However, this would be, if you were somebody that was trading coming off the back of Asia, for example, then this would be the kind of setup you'd be looking for: a clear purge on liquidity, a breakdown, yeah, and then you'd be looking to get entry in here. Now, there's a few different entry models, and I'll cover a couple of them when we're looking at triggers. But in terms of what I'm looking at here, let's have a look. So we know on our high time frame, price is currently being suppressed by this. We know what we need to do or what we want to do if we move on to a higher time frame chart, right? But ultimately, at the moment, we just have to ask ourselves where price is delivering from. Let me just clean this up. And for me, if we look at this, we've got a couple of key points of interest here. One, let's just get rid of these as well, just so we can clean it up a little bit. Right, one, we're delivering from our high time frame bearish fair value gap, right? We're then saying to ourselves, as we come into London, where's price currently delivering from? And we can see here that we've got this bearish FVG here, which I'll do in red again, just to, you'll see them normally on my chart as grey, all right? But we'll do this in red just to denote the fact that it's bearish, right? Poetry World, Altcoin, yeah, sure. Let's have a look at BAL after this, BAL. Just make a quick note of that, all right? So now we're in here. I'm also looking for other elements that can give me an indication that price has got weakness in it, that if price is looking to purge lower or if we're looking to go higher. So if we're looking at this and we're focusing on our 1 hour, and we're looking at the 1 hour as our higher time frame, let's hide that for a second, then we have this inversion here. So as price had built some bullish momentum here on the lower time frame, we can see we set this bullish fair value gap here, but price was ultimately just coming into this bearish fair value gap where we're now seeing rejection. The sign of weakness in this, right, is the fact that we've now inversed, we closed below this fair value gap. So that should have offered support if price was looking to move higher. That's where we would be looking for support. The fact that we've closed below ultimately most of the time means that we're then looking for liquidity lower down. Now, I would like to see this in the New York PM, right? But how you would look to trade this is you would be waiting for price to make its move lower, and then you're looking for an entry method as price comes to pull back. So if we look and take this as our displacement leg, right? So that's that high down to that low. We would be waiting for price to come in and engage with premium, which it does here. And then we can see here we'd either be looking for this inverse model again. So as we can see here, price comes down, closes below this. We'd be then looking to chase down these lows, or we'd be moving to an even lower time frame, like a 1 minute, in which case we'd look to be getting kind of a market structure entry down there in terms of a short trigger. All right. If we just pop out to the 4 hour for a second, because I know a lot of people on here are 4 hour traders as well. And the reason that we're cycling between these different time frames is, for me, it's always really important that you have a triple screen system, meaning that you have your high time frame. So two systems that I like using the most are either having the daily as the high time frame, the 1 hour as the intermediate time frame, and then the 5 minute as the execution time frame. Or I'm looking for the 4 hour to be our high time frame, the 1 hour, the 15 minute to be our intermediate time frame to frame the trade, and then the 1, 2, or 3 minute in terms of getting our executions. It very, very, very much depends on what time frame of trader you are. Okay, so if you're somebody that utilizes the 4 hour a lot more, then something I'd be looking at here would be this FVG, which currently looks like it's supporting price nicely. And again, I'll do this one in green because, and actually when we look at this on the H4, right, we can see how price is coming into this and then price is getting bought up. Look at these long downside wicks. Yeah. So if we're saying to ourselves in here, okay, well, we're waiting to see if price gives us the indication. Well, then if we drop down to a 15-minute chart, this is what I'd be using to frame the trade. So we're now down here, right? So we're within our trading session here, and we're saying, okay, where can we establish a bullish array? So we're saying to ourselves, where's the bullish fair value gap? Where's the area that we can get entry into here? Yeah. And then we need to wait for this structure shift. So we would look for something like a low to be taken out. So you see now, within our London session, how prices come down and started to purge this low. So we've taken out this low. And we've had a reaction, not a strong reaction, but price has failed to close below. We haven't seen displacement below that low. So now if we're saying if this fair value gap is going to hold price, we can wait for a shift in structure. And then we can look to trade this higher. The whole key thing for me here is that we have a sweep that we would look for a break in structure this high or this high here where it has more prominence. And what we would want to see in this break of structure here is a fair value gap that allows us for an entry. We can then target the key highs like this, at which point we can look to move our stops up, mitigate our risk, and then for price to move a little bit higher. All right, guys, does that make sense? Then what we'll do is I'll go through it again. We'll take a look at the BAL chart as well. Yeah, so let's take a look at that now. And I'm going to go through that again, and we will do a daily to hourly to 5 minute, and then we'll also do a 4 hour, 15 minute, and a 1 to 3 minute entry as well. Yeah, but hopefully that's kind of shown you a little bit here. I do like to wait for confirmation entries, right? So meaning that I want the market to give me an indication of when it's ready to move rather than just kind of placing limit orders. Because now if we get that hourly close below here, or the 4 hour close, sorry, then that gives me an indication that price is looking for liquidity lower down. So let's take a look at BAL. Awesome. Thanks, Erica. That is always good to know. I don't think I have BAL on here, actually. Let's have a look. I'm guessing there's... Oh, okay, then we've got a perpetual. Let's have a look. And this, to the best of my knowledge, is going to be a really nice, clean chart. So if I was somebody that didn't have the time to spend behind the charts, right? So if I'm somebody that came in, really didn't have the opportunity to kind of really sit for hours behind the chart, then something like the daily, 1 hour and 5 minute can be a really good triple screen system, right? For people that have more time to spend behind the charts, then you can look to the 4 hour, 15 minute, and then the 1 to 3 minute to execute. So let's just run through our key principles here, right? One of the things we're looking for is if price takes an old high or an old low, see price takes this high here, then if we take external liquidity, we then look towards internal liquidity to offer support. So external to internal. Then our expectation is for price to rebalance internal and go back to external up to here. Now, that obviously doesn't always have to happen, but what can we do to gauge what is going to happen? Well, we look to our fair value gaps and where price is delivering from. So when we take external liquidity here, and arguably even again here on a more localized sweep, price then corrects down and we find support at this fair value gap down here, all right? Now, as price finds support here, we can see by the long downside wicks that price is starting to get bought up here, bought up. So what's now is the draw on liquidity. The draw on liquidity we can see here is this bearish fair value gap. When price leaves these, the market often likes to rebalance them. So as we draw this across, if we're looking for continuation here, if we're looking for price to show strength, then on this same time frame, we would want to see a bullish close above. If we got that bullish close above, then when we're looking on the lower time frames, yeah, we would be looking for something like that. Yeah, so this to be flipped from resistance basically to support, and then a low time frame entry that then allows us to go up and attack these highs. However, we didn't get that, did we? Price is being suppressed by this fair value gap. Rejection. Price ultimately sells off lower. Where to? Local lows there. And then we're asking the question, is price coming down to take out this low as well? And I don't think we did. I think we came very, very close. But what we have left here are these nice relative equal lows. Yeah, so we want to mark them up. Anytime you see nice equal lows, equal highs, they're typically a really, really good form of liquidity, as are these long wicks as well that you get. Now, don't get me wrong, the lower liquidity assets, such as a lot of the altcoins and low caps, you'll see very, very gappy price action on the lower time frames, right? But I can show you how you can kind of account for that. So ultimately, while price is delivering from here, so here and here, we're bearish. Price is then coming down and we're finding support at this, right? Which is our bullish FVG. So technically for me, on this time frame, while we're delivering from this, and let me do this in green so it stands out a bit more for you guys, then I'm looking to be bullish. While we're delivering from this, which I'll do in red, we are looking to be bearish, right? And price ultimately is constructing a range in here, right? It's consolidation before it commits to its next move higher or its next move lower. So we've got that lined out. We can see where our key liquidity is resting here. We also have this. That's not a confirmed swing high yet because we haven't closed this candle. So in terms of our upside liquidity, I'm going to be looking at that. I'm now going to take this down to an hourly, and this is where we can help refine our trade, right? So we're looking at this on a day-by-day basis, and we're saying to ourselves, okay, well, while we're interacting with these highs, yeah, we're looking for price to purge lower. Yeah, when we're interacting with these lows here, kind of just touch upon them here in London, we come up, we close below them here, and we come down and set this low, which doesn't quite, I don't believe, touch. No, it is just dollars away, right? But we see that as the draw on liquidity. So while we're up here, we're bearish. So what are we looking for? We're looking for price to be respecting bearish fair value gaps, and we're also looking for key lows that we can target. So for example, if we look at Friday's price action, here's our prior day low. So we'll mark that up as our PDL, standing for our prior day low. And then we're saying, okay, well, when we come into our New York trading session here, where are we looking for price to deliver from? Remember what we said. We want to see price deliver from a bearish fair value gap, which we have here. So I don't know if you guys can see that particularly clearly, but as price draws up here into this bearish fair value gap, then price delivers down here to this low. All right. So by utilizing this and framing these trades from our daily to get our overall bias, to work out where price is reaching for, is it showing strength or is it showing weakness? Like we wouldn't be looking to short in here because price is engaging with a bullish fair value gap. Until that's violated, right, in which case it would then tell us that price is looking for liquidity lower. Now, we don't know if this thing's going to come all the way back up to here or if it's just going to have a small corrective move. So this is where we then refine this on our lower time frames, right? So we can see in here our key interaction. So price comes up. We induce liquidity by sweeping this higher. We then look for a shift in structure, leaving our fair value gaps. And we can then take our premium discount of that displacement leg. It's just a Fibonacci with 50% split. And we want to be favoring our entry points from the respective premium and discount. So we want to be shorters from the top 50% and we want to favor longs from the bottom 50%. Using it as a trigger mechanism allows us to target this fair value gap rather than this one, right? That just gives us a better risk to reward. We get tagged into our trade here, stops above that high, and we know what our target is. Yeah, because we'd already labelled it up, right, as the prior day's low, PDL. Now, you can de-risk on these trades as well. So, for example, you can look further left and you can take interim targets, move your stop loss up, for example, or if you're an R to R risk to reward trader, then basically you're working this out over a time period that you know that once you hold these to liquidity, you either accept the loss or you take the win. For example, here, if we'd used this to move our stops to entry, then we would have taken partials at 2.1R and price would have come back and just wicked us out of the trade here. If we'd held, then we could have got all the way down to 5R. However, we need to appreciate that by holding these and mitigating our risk less often means that we have a lower win rate but a higher risk to reward. All right. Like if we look at someone like Burb, for example, and his amazing swing trades, then he knows that he can be wrong up to 60% of the time. Right. So when you look at it like that, you're saying, and sometimes higher, creeping more towards 70, it can only have sometimes a 30% win rate. But such is the risk to reward on the returns of the winners that it eclipses the mitigated risk of the losers, right? So hopefully that makes sense. Let me just take a little quick look through the questions. So, Nit, hello, mate. BC, hi, mate. I noticed you've charted on Bybit. Bybit isn't UK friendly. I started charting what you've done to learn against KuCoin, but noticed a lot of gaps. Appreciate your thoughts. Yeah, sure. So I think basically it's all to do with liquidity, right? So the less liquidity, the more gaps that you see in the market. So as we move down lower on some, we probably even get this if we move this down. Although this actually looks pretty solid liquidity on this, right? Can you see how the candles become? Hard to say, but you kind of see it looks a lot more like you kind of used to get on the old type prints. Yeah, you can see that you get a lot more flat levels that are respected, and you see these ones, right? You basically just get these flat candles. These are kind of like gaps as well. You're welcome, Poetry World, very much. But if we go to kind of like less liquid assets, then you'll start to see gaps all over the place. With those gaps, it can make it quite tricky to get those lower time frame entries because you're actually looking more at volume gaps as well, right? So just trying to think if we have something on. This has probably had, I was going to say this one's probably got quite a bit of volume behind it at the moment. I mean, unfortunately, mate, a lot of exchanges are getting a little bit less friendly towards the UK, which is really, really sad to see. We just used to have just such an amazing finance network over here and the crypto space, and it used to be a country that encouraged innovation so much, but sadly not so much anymore. But for every loser, there's a winner, and that will, definitely benefit other countries more. Okay, so forget all my scribbles all over it, but can you see how different this price action looks on low liquidity? Oh. You just see a lot of these flat dots, almost like flatlining, and then you get these very much more kind of rigid price structure. It looks a lot more kind of computerized, right? And that's all to do with the lower liquidity. Now, if you're looking at that, obviously you can use decentralized exchanges as well, which is a really big thing. And you can also I won't recommend that anybody trades with a VPN, purely because I think if the licensing and the legal framework isn't there, then you kind of lose any kind of protection that you have on it as well. I think the key thing for us, right, is some kind of, is this kind of passing of like the Bitcoin ETF or something like that, for example, which I think could really kind of force the hand. But I am surprised that the UK legislators are making it so difficult. I know you can trade on KuCoin. Again, unfortunately, there's not really anything you can do in terms of the liquidity, right? So you have that lower liquidity, then unfortunately you are going to see these really, really big gaps. And I know that does become really, really tricky to trade. The key thing there really is actually looking at your your bigger ticket crypto, if you like, your Ethereum, your Bitcoin, stuff like that. It just kind of becomes a little bit more limiting for your altcoins. That's one of the things. So while I don't know why you guys maybe get together. Yeah, it does. Unfortunately, DEXs again do lead to that problem. Nick is just saying that DEXs again mean another charting match problem. And that is the issue, unfortunately, is the liquidity on there. So I think Sometimes you can then look to refine the systems for slightly higher time frame ones where the gaps are less relevant or less prevalent. Sorry. So obviously, the lower the time frames that you move down. Let's try and find let's get BAL up and see if we can get that on a. Maybe not on that one. Hang on, let's try it without the perpetual. Let's see. This might not be as representative, this one, because it's not on a perpetuals contract, right? But if you move something like BAL, right, that's you can't obviously trade that on KuCoin on a 1 minute chart, right? This is all to do with exactly what we've been discussing. You'll see this as well a lot on. Even on a 15 minute, right, you can see all of these gaps. And the problems with these is obviously it then becomes really, really hard to target your key fair value gaps. Okay, yep, we can see one here, right? So similar kind of principle. If we were looking for an inversion of this, we'd be looking at this close here, and then we'd be looking to chase down these highs here and here. But these gaps do make it incredibly difficult. In fact, I think you probably have to go something like an hourly before you're even getting a kind of clear structure, and then you'd be looking at like a weekly based system for your kind of real high time frame. But yeah, it's a shame, mate. It's a tricky one. I mean, something we're going to work on at the moment is maybe looking at a way that we can do more with like with prop desk, with funding, to make it that you can kind of have access to those assets on good exchanges that have good liquidity, but you're not kind of obviously exposed as much to the risk that we have here in the UK, which is that we're losing a lot of these exchanges to regulatory issues. But it is a bit of a pain, and I do definitely feel your pain on here. For me, being a professional registered trader for Bybit, it means that I am audited in the same manner as you would be as a traditional market trader. And Kaz is on the move, is it? Let's take a look. Here we go. So BTC having a little bit of a move. What's Kaz doing? It's all sneaking its little head up. Nice. So if we were looking at this in terms of this, as we were discussing here, looking at this kind of structure break and then it moving high, we can see that we've got that move at the moment. Typically for how I trade, I really like this kind of inverse method, especially I love it on equity markets, but I do really like it on crypto as well, because sometimes you just don't get these kind of pullbacks that you get on there. So if our conviction here is we're delivering from this, we'd look to kind of get some entry here. I mean, that has run quite hot, to be honest. So the risk to reward isn't quite there for this. We're just shy of our 1. And to be honest, we probably want it to be a little bit higher as well. But you can take those closes above your inversions. But as we can see here as well, we have got this, right? What we were discussing earlier. We've now got this fair value gap here. So if we do it in line with our TA from before, this has created the fair value gap on the 5 minute. We can look for that retracement into here. And then we're ultimately looking for it to take out this high. But you always have to make sure that your risk to reward is there, right? If your risk to reward isn't there, then there's just, there's no point taking the trades, because what will happen is you'll just end up taking too much of a hit on your losers, right? And then not enough in the bank from the winners, all right? So this is a really interesting point, right? Because as we can see the crypto markets here, we can see these are starting to take off, yeah? We can see this all nicely in green here. Let me show you this. Let's take a look at our CVI. And let's see how we could use this in a hedging capacity. Like I say, right? Get this up here on our hourly. Let's take a look. The great thing here is you can just connect your wallet straight into it, right? So the same way that you would operate with a decentralized exchange, although in my opinion, this is kind of a lot more user-friendly. I think they've thought a lot more about the UX on this. But we can see here, right? See how we've had these pullbacks and bits and pieces, right? But the key thing with the VIX, as they've managed to harness with the CVI, is you miss out on these massive kind of market swings. You typically have a system that reverts to the mean, meaning that it's a really powerful tool. From a couple of perspectives, you can run traditional TA on this. Yeah. So we can see here in this downtrend as we move in, let me just move that and make that a bit bigger for you guys. Look, we can actually see in here how we can wait for these structure breaks. We then get our fair value gap here that supports price just absolutely perfectly. Yeah, fair value gap supports price up. Then what are we looking for price to do? Well, we're looking for it to be supported by the down close candles, which gives us more opportunities to get in here. Again, we find that support once more moving up. Now, remembering the powerful thing about this is you're using this, right, based on the volatility, not on the asset. So you can use this as a hedge. So if we look up here at the moment, we've got crypto doing well, right? We look back here over the last few days. This has just been going up. Let's have a look back here. So we've had a really nice kind of bullish intent on that since the 18th of December, right? Now I'm just going to flick over to my BTC chart. Just see Kaz is having a nice run at the moment. So we can see here how we could get in. We'll flick back to that in a moment and see how we could get in using the inverse method and how that kind of structure break method didn't quite give us the pullback that we would be looking for. So I know you can't see this at the moment, guys, so do just bear with me for a second because I just want to take a look here and compare the data looking at this on the 18th, right, where we've obviously had, we've had a nice run from price. We've had a kind of corrective move from price. So what I want to show you is how you can kind of get on the right side of that from both perspectives using the volatility index. You can also find some really, really cool VIX, like traditional market strategies as well. Because what I want to show you here, where this really kind of starts coming into its own, let me just compress this chart up and then I'm going to flick you back and forth between the two. So on the 19th, right, we had Bitcoin made a large move up and then we had the corrective move down that saw us then consolidate before we've had that next leg up here, right, which started and is now continuing on the 20th, right? So we saw price kind of peak up. We had that nice run up on the 19th, but then actually, if you were getting long or looking to jump on board that trend on Tuesday the 19th, then you had that big corrective move lower, and I know that wiped a lot of people out. So when we look at the CVI, right, we can see here on the 19th when people were getting wiped, how this just continued to go up, right? So if you're taking a position here, yeah, and you were long on this, but what happens is your position on Bitcoin, which you're also long on, does this, which it did, corrected down into an inefficiency lower. You can see how you're then protected by that, right? Then if we draw this across here, we can see how this level is holding. So then all of a sudden, when Bitcoin recovers and you get back involved with the trend again, you're then on the right side of the volatility again here. You see how you didn't have that same drop, right? And let me show you that on the chart. It's something that I just been, yeah, sorry, Devo. I need to share them both separately. So I just removed that one here, yeah? So we can see here, right? Look, this is the 19th. We had this big corrective move lower. Now, a lot of people were looking at that in here, seeing this big pump, seeing price come down to consolidate here, and the expectation was that price was going to move higher. There were also high time frame levels that we could target. So you see this up here, for example, and this, they never got ran, and that was a key thing for price. Again, why when we were looking to short this was because we failed to take this. We showed weakness by violating the 15-minute fair value gap, and it allowed us to trade this lower. However, if we weren't in that, we were taking a higher time frame position here, then our expectation to go long here could have been someone moving door. Yeah, exactly, Johnny. There is indeed. Christmas presents getting, some last minute Christmas presents getting delivered, hopefully. Well, not actually last minute, but the delivery of them is certainly last minute. So what I'm just saying here is how we can use it as a hedge. Like the Aussie Bogan here raises a really good point, right? CVI is basically the crypto VIX. I mean, it is exactly right. It is the crypto VIX. It's the crypto volatility index. Okay, simple to use. CVI 3. Yeah. So what he's talking about here is using CVI Ultra as well, which is where you can get 3 times the normal movement. So you can play triple the volatility, right, and the volume, and also using 16x leverage, meaning that basically what you're doing is you're compounding your leverage, giving you up to 48x. All right. Now, at the moment, it is long only, right, which is ideal for the current bullish market conditions. Like I was saying, when we look at that, we can see the corrected move here we got on the 19th. Let me just flick this back here to our CVI as well and just show you how we could have just held through that and how CVI would have just held us up quite nicely. Right, so we see that. We can see here we didn't kind of suffer that same drawdown here. We had a little drop off in it here, but that's not a problem because the market's recovering at this point. So you see how the two realign. Yeah, it can just be a really, really good one. And it just kind of comes in and it just stops you kind of taking that, because as your Bitcoin position's going down, your CVI is stabilizing, your CVI is actually going up. But the really key thing is then when the trends are aligned again, it's all about, the volatility stepping back in. So you're realigned with the volatility, right? So if you're getting caught out by a news event, you're getting caught out by kind of, Musk flooding the market, for example, as we had previously, and other things that go on like that, then you're just kind of offering yourself that protection. What I'm going to do to kind of just put this a little bit clearer for you guys is show you kind of how we can be applying this in the current market conditions. And I'll put together with the team some threads and, some Twitter posts, so you can take a look at that. But what I absolutely would do is I would check these guys out, go onto the website, check out the Medium articles, which are showing you, and I'm going to have a run through them as well. But with these current market conditions, this is just such a useful tool. Which is just why I wanted to show you guys on one of the live streams. I think just get yourselves on there. You can play around with it. Again, you can connect directly into your wallet. You don't have to be risking big funds and that on it. You can just take a look at how this can kind of offer you a little bit of protection, especially as the market conditions get volatile. We're moving into Christmas, and obviously to mitigate for our news releases as well. DJ T Johnny, I didn't expect. No, always fine, mate. I don't mind a bit of messing around as much as the next guy. You're not rude or disrespectful, which obviously doesn't really cause me any issues on that front, mate. So before we close up the stream, did anybody have another crypto asset that they want to take a look at? We'll close it up with one more, shall we? Let's just have a very quick look. So any suggestions? We have 30 seconds, and then if not, we'll take a quick look at ETH. Casper. Was that Kaz that we were just looking at, guys, was it? But woo. All right, let's turn our replay off a second. And was that not KAS that we were just on? That not Casper, though? You know how terrible I am with these things, guys. So where were we? We were Bal. Yeah, it was. Okay, so we've done that on that one. Greenlight Crypto. If you haven't had a chance to look, we actually just reviewed that a few minutes ago, so you can watch that when you look back on the stream, which will be available probably in the next hour. Just go onto the Bird Nest YouTube page, and then you can take a look under the live tabs where we'll have it. Let's take a really quick look at Woo and INJ. Yeah, just quickly. So Woo, which has been getting a lot of exposure. Again, another company I really like the look of, doing a lot of things on the exchange side. So let's have a quick look here. And we'll really focus this look here. Oh. Hang on. We've just been kicked out. Let's load that back up again. It really didn't like the look of Woo there, did it? But Woo, fun enough, is something we've had a lot of calls come out of the nest, actually, a lot of our official calls And for very good reason, because Woo is a project that we really, really like. And from a technical standpoint, it also stands up incredibly in line with that as well. So let's just grab this chart back up. Let's just see if I was literally about to say how we kind of got through the stream without any issues with Chrome. And then it drops a nice little bombshell on us at the end. Awesomistic. That's an awesome name. No worries at all, Greenlight Crypto. It's on the it will be on this from literally probably a few minutes before you join, mate. But hopefully you find it useful. We'll take a very quick look at it actually before we shut up the show if the technology allows. Right, here we go. So let me just share this back with you guys before we go, just so that we can take a very quick look at that. And just for our friend Greenlight Crypto, let's just see if Kaz has had that pump. And let's see if it will let this share this with you. Here we go. There we go, guys. So, okay, so we can see here, look, so for me with this particular system, as I said, I have my stop loss to entry here. Enter on the inversion method. We got our one-to-one risk to reward, right? Pump it up into that. Now, for me, it's a case of finding support around these areas here, right? And then I think we can start looking at higher targets. You can look at this in a way that you want to see displacement above this. You want to see this area kind of held. Now, as we're using these kind of down close candles, we want to see a close above these and the use of these as support. In the same vein that if we're in a downtrend, we want to see these up close candles act as support. And then often when we draw these across, they become areas of mitigation, meaning that when we close above them, often a sign again that weakness or where we should be seeing resistance has turned to support, and we can then look to trade it higher. Right, let's take a very quick look at Woo, because I did promise that we would. Hopefully the tech holds up. There we go. There's my one on Bybit. Okay, so the first thing that we can see from the chart in front of us is how price is currently delivering from that large bearish fair value gap on the left, right? So the theory is that price is reaching below old lows or above old highs for liquidity, or it's looking to rebalance inefficiencies, which are our fair value gaps, yeah? So in this instance, let me just get rid of those. Let's just move to our higher time frame, and we're going to do a really, really quick top down for a couple of minutes. And I did say to someone as well a little bit further up that we would take a very quick look at INJ. Now, as you'll see this a lot on crypto at the moment, the price is moving really, really hot. What I would suggest here is you can look at your change in the state of delivery to look at getting into prices. So here, for example, we have our change in state of delivery. What's that? It means that these down close candles, when we close above this, the body, the top of the adjoined candles, or if it's a single candle, we can look above this. That's our change in state of delivery as well. Why? Because that bearish candle, when we close above it, is a sign that, again, if we expect that to continue down, then we would look at the state of delivery to continue bearish. So let's just look at a couple of these recently. So it's a point that it's important that if we have adjoining candles, yeah, so like these two, that we allow for the bottom. So price closed below here, our expectation is for price to trade lower. So on a daily scale, what happened? Price opened up and it took out the prior day's low. Successful, right? Now, why didn't we get bullish here? Well, quite simply because these down close candles here, the change in state of delivery is above this, and we never closed, right? So ultimately, we then look at our up close candles, which is this. Let me delete these just so it doesn't get confusing. This is the bottom of our up close candles, 1, 2, right? If we're expecting bullish continuation, we need to close above these. We don't. When we close below here, our expectation is for price to continue down and ultimately we take out liquidity below this low. So with price now moving up, when do we then get back into a bullish frame? Well, here we have these two candles, so we wait for that, but we have another down close candle here. So we would now need to close above that. Ultimately, we have these two, right? So once again, we have this singular bullish one. We close below here. This day, our expectation is for it to take out the prior day's low and possibly lower, right? When we have this bearish candle here on its own, what happens? We close above it with this candle. Our expectation is for this day's high to get taken out above. When you then set yourself into a bullish state of delivery, we're then confirming these as order blocks when we change the state of delivery. So we close above it here, meaning that any test into these, we're looking for long continuation. Now, the reason I just wanted to emphasize that is because it's a really, really good way to keep yourself within trends. All right. So as I'm looking at the moment, we're bullish here. I'm conscious that we've taken out this high. If I move to an hourly time frame and I look at where we are today, then if I want to maintain my bullish bias, price was delivering from this bullish fair value gap here, right? Which we'll do in green to show that it's bullish, right? However, we also notice that we've taken external liquidity. We've taken this high and this high here. So now that we've taken that high, our expectation is for price to go from external to internal liquidity. So this corrective move lower. Now, once again, we need to remember, if we're looking at our state of delivery, that this candle closing below here, is giving us the indication that the up momentum's over. We haven't closed above this down close candle, So now we're still expecting price to purge lower. So as we're asking ourselves a question of what that's doing, we can then move to, say, a 5-minute chart, and we now need to look for where price is delivering from. So remember, our bias is bearish. We've just started our New York session. We're asking ourselves where price is delivering from, and price is ultimately delivering from this bearish FVG. So we can see as we overlay price, with that theory, we can jump onto it and we can say, okay, well, we're now delivering from this 5-minute. What do we need to do? Well, we want to be within our trading range and we want to be within our time. That's for me anyway. I like to be. As I'm moving into this and I'm looking at this in terms of scalping it, I'm saying to myself, okay, look, price is holding these bearish fair value gaps. And remember what I said, we want to see the down close candles defend price, the up close candles, defend price in the form of order blocks. So what did we get? Price closed below here, meaning that we can be a seller, within this order block. Because if we're wrong, price will close above it and invert it. But until we're not, that becomes our short position in here. It's a shame, actually. We just bloody missed this at the beginning of the session. I should have really thought about that and lined some up, which I'll do next week. We'll push this session a bit later and we'll actually look for some entries. Now, ultimately, we're targeting lower, right? So let's just say our ultimate low is this one over here. But we are obviously going to be very aware of all of these. So my stop loss has gone to entry here, meaning that now if I'm wrong and we wick up and we take out that, it's fine. I've mitigated my risk. Right now, I'm looking for this bearish order block to send price lower. Expectations, price draws into this, continues down, probably takes out that low, has another corrective move, moves down to a lower low, and then we move lower. However, on a 1-minute scale, and I'm not suggesting you do this, then if we're closing above this, then I would expect price to move a little bit higher. Now, I did just say as well that I'd take a very quick look at INJ before we close off the stream. I'm really sorry, Awesometric, but you just got literally the most awesome name. We just need to shut up the trade here. So we're just going to look at INJ, but I do promise you that next week every Wednesday we do our alt request Wednesday. So if you do manage to pop on next week, do let me know. And if not, if you do pop on Monday, just let me know. And we'll also take a look then as well at ETH BTC. Okay, so for me, actually, at the moment, this is really nice and clear. The draw on liquidity, if we're just looking at this on an hourly scale, is this fair value gap here. We expect that to support price. So for me, we're going to do one of two things. As we continue to draw down into this, I'm going to look for bullish setups on the lower time frame to drive this higher. If we close below this, So we do that in black because that's a bearish close below. Then my expectation is for price to chase down lower. All right, because we've inversed this, meaning that we're not showing it the respect that it deserves. It should be offering support. Now, remember, I'm not saying we are going to do that, right? What I'm saying is that if we do that, we have a plan to trade it both ways. If we invert it, meaning that we close below it here, then we look to drop to the lower time frames and chase price lower. However, as we're looking at this at the moment, and let's just flip to our daily very quickly so that we've ultimately got our, we can see that this is just ripping and ripping and ripping. So what we have done is, as we said before, the close above this was our change in state of delivery. That close above gave us the opportunity to go long, starting with this higher. On a daily scale, we now want to see price continue that by respecting this. As it's closed above, it becomes an order block, as do these. But we need to wait for the close. So if we look at kind of a more of an intermediary time frame here, the 4 hour gives us another really nice, clean, clear fair value gap here. Right, so again, depending on what our screen system is here, do that in green. I would actually be looking for this to kind of dip into here. And then in here, on a lower time frame, I'm going to show you the setup we would be looking at, because it's going to be the same one as we found in here. Right, so remember this in here, we dip into this, that's the 1600 open candle. So we're looking at this within our New York session. I'm going to move this down to a 5-minute chart. And what I'm looking for in here is the same thing that we would have got in our New York PM session. Actually, we got the trigger kind of in between sessions here. Oh no, it's fine. It is fine because we actually got the trigger within it. For me, it's important that we get the actual trigger, we get the trade play out within the New York PM session or AM, right? So the things that I'm looking for here are, we've had a sweep of the lows, which is our inducement. That's really, really important. And then I'm looking for weakness to turn to strength. So if I'm looking for my inversion, I'm looking at the close above here. First target are those equal highs, because we're always very, very conscious of equal highs. Our stop goes below the swing low. Might take that minus 0.07. It's right on the borderline of being a 1-for-1. Ultimately, what do we get down here as well? Price comes down. We get a sweep of these lows. We don't really get a clean inversion setup on this time frame, which is fine, because what we do get is we sweep the lows, we break the highs, we can be a buyer in here. So we would line it up with our fair value gap. Our stops have to go below the swing low. So I think we're just about all right here. Actually, we don't quite get taken out. Might have done if you were tight and you brought the stops on here. Again, you want to favor your external lows here. But ultimately, that's the setup that we're looking for, right? Purge lower, take out liquidity. We either want to see a break above, leaving a fair value gap. So, for example, with this one, if we were posting this, we can see how this one would have given us a nicer risk to reward, because our fair value gap's down here, meaning that price would have triggered here. Our stops below this one here, which would have been nice. And then actually to this one, we would have got a 2.6R trade. The only reason I'm showing you that, guys, is because they are the type of trades that we're looking to take with this corrective move into here. Yeah. So with this kind of move here, we'd be looking for something like that. Oh, if it lets me do it. Move lower, goes up, breaks, sweeps, retests, moves higher. So let me get rid of this one. You see this? That would be our shift in structure. That would be our sweep. And then we would ultimately be looking for a fair value gap in here that would allow us to get an entry. Either that, or we would look for an inversion of the fair value gap on this side of the curve and then look to chase down these highs. All right. Now, price might not reach down into here. It might run a little bit hot. But for me, that's very much the way that I look to trade the markets. I'm looking for the inefficiencies to be filled, to remain in line with our order flow, because I think there's no secret here that this is bullish, right? So we want to stay in line with our trend, but we also just want to make sure that we're doing it in a way that allows us to kind of target the areas we can get the best entries from a perspective of risk to reward. Now, I know that might have been a bit more convoluted this week than it was meant to be, but hopefully it kind of gives you a little bit of an insight on that. I'm going to probably look to build out on this bias, this top-down into trigger mechanisms as we move forward. But please do reach out and let me know, guys, if you've got anything particular that you would like to cover on these. It'd really, really be my pleasure. And I do really want to kind of do a little bit more of an introduction to the CVI as we move forward. I think I'll ask the guys and the teams over there as we all have a play about with it together to show us maybe some trade setups that I can share on Twitter for you guys. And you can see how you can use that as a really, really clever hedging mechanism against your crypto positions. So for me, that is it. I'm going to get my head into the markets now, see if we've got anything that we can look at in terms of trade setups for this afternoon, maybe do a bit of scalping with some of the members. So Erica, I might see you there in the chats very shortly. For everybody else, it was great. We saw some really, really awesome, obviously some real old school soldiers on here as well, but some new people as well. Awesomistic, just a brilliant name. Which was brilliant. D. Johnny, very much welcome. The Aussie Bogan, thank you very much, mate. I'm glad you enjoyed the TA. Thank you for your awesome explanation with CVI as well. Obviously, somebody else that's a huge fan of that, and you cannot blame them. Greenlight Crypto, Devo, Smock88, you were on here on Monday as well, when you mate. Sorry we didn't get around to IOTX. We absolutely will. Joss Colin, that was the suggestion for Woo. Thank you very much. I hope you found that insightful. Poetry World as well, somebody else new on there as well. It's really nice to see these people coming in. Imtiaz as well, our friend from Doha, which is brilliant, and Atarnus. We had a load of new people on the stream today, but also a lot of our old school legends as well. Erica, Josie, Simon, brilliant to see you on here. Whack, of course, our friend Steve Etienne, Imran Khan. And just tons and tons and tons. I'm really, really sorry if I've left any of you out. Nit as well, obviously, as we go back down the list. Really good to see. And who do we have sneaking on the late one? Nelson as well. Brilliant, mate. You're very welcome. Great to see new faces on the stream as well as some familiars too. And Zambuka 1977 sneaking in. It will all be on recording, guys. I hope you do enjoy it. Do reach out to me. You can reach out to me on Twitter. You can reach out. The other thing as well is we've got some amazing deals and partnerships. They're all getting announced on the Nest, which means that there's going to be lots of fun prize giveaways and bits and pieces. So make sure you're involved in that. You can find everything down in the description. All right, guys, wishing you a fantastic week ahead and obviously an amazing Christmas. Make sure to get out there and touch some grass and be with family. And I look forward to seeing some of you around the Nest if you're part of what's going on there. Remember, you can get involved in that in a lot of different ways. Free trials, free memberships, be part of the public. You can come into the exclusive Nest Club, get our calls only as well through our partners, which you can get for free. And if I don't see you around there, then I'll see you legends in the new year. Have a fantastic Christmas. Be good to one another. And I look forward to seeing you all very soon.